Good morning and welcome to Core Finance. I'm Matt Brown. I'm joined by Alessio Rastani, who is the founder and CEO of leadingtrader.com. Good morning to you, Alessio.
Thanks very much. Good to be here. Thanks.
We're going to start off with the S&P.
Right.
Grinding higher and higher.
Absolutely.
But we need to look at potentially some volatility here.
Well, here's the thing. Everything I'm going to say today could easily apply to the Dow, could apply to the FTSE UK 100, to the German DAX, because predominantly we're seeing the same patterns appearing across the stock markets. So not just the US, but also the UK, European markets too. So what I've shown here on this chart, which is quite interesting, is going back at least for, what is that? It looks to me like about a year, and seeing how volatility has acted on price. So as a sort of a leading indicator, in fact. And notice what I'm showing here on this chart is when volatility drops, like it is now. I mean, look at this, Matt, and I want to show your viewers. Notice how the volatility has dropped below its previous levels for the whole year. I mean, it's gone below that red line that I've just drawn there. And notice that whenever volatility gets this low, notice what happens to the price, to the stock market, in other words. The market usually responds by a correction. That first arrow you see there on the left, the volatility dropped quite massively in August of last year, which resulted in a multi-month, at least 2 to 3 month correction in the stock markets. Dropped, but I think it was about 3 to 4% drop there. Then again happened in December of last year, the volatility dropped, and more predominantly happened this year too, in February, March, then again in May, June. Each time, notice, in fact, more recently occurred in August of this year. Notice that again we had another volatility drop, and then we had a corresponding drop correction in the stock market. So what this volatility is telling us, and whenever we get these low volatility readings, it's warning us that we could be due for a potential correction. How big that correction is going to be, we don't know. I mean, it could be something as small as a couple of percent, 2%, but maybe some. I think what seems to happen though is about a 3 to 5% correction is probably more common. I personally think, given the fact that we've rallied this high, we've had a single correction for at least a couple of months now. I think more likely I'm looking for a 3% to 5% correction. That would bring the S&P down to, at a minimum, at 2,500, but we may even go below 2,500 and test previous support at 2,480. So those are interesting things. So folks who are watching us right now, certainly look for any sort of divergences, look for some setups to potentially get short on the stock markets. In fact, I'm going to talk about that with our own premium members on Leading Trader. But what's your opinion, Matt?
Well, there's two things. It'll be interesting to get viewers' comments on this. The fact that we have low volatility actually supports, potentially could support the case that the market is stable, that it is a good investment opportunity, and S&P could grind higher. But also, I'm always wary when volatility is low. I think the market is then getting too comfortable and isn't hedging the risk of a market downturn.
That's right.
I think a market downturn is going to happen at some point. I'm not sure, and I think a lot of people aren't sure what that catalyst will be.
Yeah, I'm glad you brought that up. And I'm not looking for a market downturn in the sense of a crash. I'm not looking for anything significant. But all I'm looking for is a correction. And again, something I forgot to mention, which is that we are now towards the second half of October. There's something called the Halloween effect. And the Halloween effect occurs around about this time of year. In fact, as we get close to the end of October, or Halloween, in other words. And that effect simply is this. Usually you see weakness or a drop in the stock market. Again, it could be 3% or 5%, something along those lines. But that usually is a buying opportunity, because the Halloween effect is being studied for going back decades, over 50 years. And it says that any weakness in the months of October to the first half of November can be used and should be used as an opportunity to get long, because the next period from November to December is very strong. And then you got the Santa Claus rally coming up towards the second half of December. So I would suggest to folks who are watching right now, sure, it's okay to get bearish now, but when the drop happens, when you see a correction, be ready to get long, because the Halloween effect, which has been, again, consistent throughout decades, will probably step in, and we should see a rally back again to retest. I think I would not be surprised to see 2,600 by the end of this year. So again, any weakness in the next could be happening in the next few days, or maybe by the end of the month. Use it as an opportunity to get long.
Fantastic. And another trade as well is buying the volatility.
Right. Yeah. Absolutely.
Well, buy the VIX.
Absolutely. Yeah. Or go look at inverse ETFs and things like that. Absolutely.
Fantastic. Lots to think about. And it'd be great to get your comments as viewers where this market is going. Is volatility going to increase, and is the S&P at all-time highs? Are we going to see a correction? Alessio, thank you very much for joining us today.
Thanks a lot.